Hello, I'm Anna Mackay and this video is called Tax and Other Deductions. For my students, you have a sheet to fill in with some missing blanks, so make sure you have that handy and a calculator. So reading through some information here. Tax and other deductions. The federal government collects income tax. This tax is calculated based on a person's what income? It's based on their annual income, so how much they earn throughout the whole year. Employers withhold a part of a person's income every time they are paid. This is known as PAYG. Now what does that stand for? Pay as you go, it means. Pay as you go. So they take a little bit out each pay so that at the end of the financial year it doesn't hit you as a lump sum. Gross income. What does that mean? Gross, it doesn't mean disgusting. Gross is another word for big or large or whole. So the gross income is, now writing this down, is the income before tax has been subtracted. Has been subtracted. Remember, you can pause this video at any point to give you time to write things down. Net income. So think of when you're fishing and you net a fish, that's the fish you get to take home. So the net income is the income you get to take home, but we'll say is what is left over after tax. So essentially, what you get to take home. So therefore net income is also known as take home pay. How much you get to take home. Take home pay. Okay. The tax rates. So this is the tax table from 2016-17. Now until you have a job, it can be a little hard to understand what tax is for and why you have to pay it. In a nutshell, some of the things you have to pay tax for are for health and education. So everybody has to contribute to that. And how much you contribute is based on how much you earn. So there's some different brackets here of which tax bracket you fall into. And then it tells you how to calculate it, how much tax you have to pay depending on which bracket you're in. So let's do some examples on that. So calculating tax and annual income. We have to use the table to calculate, first of all, the annual income tax and then the annual net income. So annual meaning per year for a gross income of $91,350. So anytime you have to work out the tax on an annual income, go back to the tax table. So let's just have a look. That was $91,000. Have a look down the left. Where does that fit in? $91,000. So it fits in here. 91,000 is between these two numbers. So this part will tell you how to work out how much tax. So let's go and do that. As you can see, I've copied and pasted the information there so that we've got it on this page to work out. So let's read it through. It tells us how to work it out. So $17,550. So you instantly have to pay that much tax. So let's fill in the gaps. And then it says plus, so you write a plus sign, 37 cents for each dollar. So 37 cents will be 0.37 in terms of dollars. Now for each dollar over 80,000. So you ask yourself, well, how many dollars over 80,000 did this person earn? So that means it's the difference between this number and the 80,000. So you have to do a subtract. So you put the annual income here, 91,350, and you'll be subtracting off 80,000 to find out how many dollars over 80,000 we have to be charged 37 cents in the dollar. So get your calculators out and work that out. I'll assume you've done that, and the answer would be $21,749.50. That's how much tax for the year. So therefore, how much do they get to take home? How much is the net income? to work that out, you take the gross income and take away how much tax they had to pay. So let's write those two numbers there. 91,350, take away the tax, $21,749.50. Using your calculators, work that out. I'll assume you've done that, and the answer you would have got is 69,650 cents. Oh, with a dollar sign. Should have put one up here too. So that's how we would work out one tax question. Next, so the pay-as-you-go tax and net income. So a couple of parts here. Calculating the tax that is deducted each pay and the net income each pay for a gross income of $4,561.75 paid monthly. So this time it's not for the whole year, it's per month. So let's go through this step by step. First of all, we need to work out the annual gross income. So how much for the year? So how do you do that? How much were they paid per month? So let's write that in our first box, 4561.75. Now then multiply there. That's per month. We want per year, annually. So how many months in a year? 12. Work that out with your calculators and your answer is $54,741. We'll put the dollar sign at the end, right at the very end. So that's an annual income. So whenever you want to work out the amount of tax deducted, you must go back to that tax table and see where about $54,000 fits. I've done it here for you. 54,000 is between these two numbers. So reading the box, it will tell you how to work out the tax. You start with this amount. So we'll fill in the gaps. $4,650. And then it says plus. So you do a plus sign. 30 cents now. So putting that as a decimal, 0.3 or 0.30 multiplied by every dollar over 37,000. So first of all, we then write, well, we have to work out the difference. We had the $54,000 here and work out how many dollars are over 37,000. So the biggest number, take away the smaller number. Using your calculators, typing all that in your screen, making sure you use brackets. Do that now. And your answer is $9,972.30. So that's how much tax for the whole year. But the question said, find out the tax that is deducted each pay. So each month, how much tax? Therefore, we take the tax for the year and divide it by however many months in the year, 12. So $9,972.30, divided by 12. Using your calculators, what did you get? $831.03. But the question asked us the net income each pay so the net income. So how much are they taking home each month? To work that out, we take the monthly amount that they are earning and subtract off the tax. So that's what these last two boxes are for. $4,561.75. Take away the tax that we've just worked out, $831.03. And our final answer, using your calculators, what did you get? $3,730.72. Put that dollar sign there. That's how much they get paid each month. Next one. So, concept of deductions here. These reduce a person's taxable income, which means he or she will have to pay less tax. They include expenses that help you earn money. So for example, if you ran a lawn mowing business, every time you would have to buy a new lawn mower, you could claim that on tax, which is called a deduction. Membership or professional associations or unions, car or phone use if it's for your work, and donations to recognised charities. So to work out your taxable income, you take your gross income and subtract off any allowable tax deductions. Now a tax return is a document completed at the end of a what year? It's called a financial year. So filling in the gaps on your page. Now, depending on someone's tax return, a person may receive a tax what? It might be a refund, so they may get some money back, or they may have to pay more tax. So moving on to a question involving deductions. Carrie is an engineer whose annual salary is $95,000. During the year, she had work-related expenses totaling $1,200, paid union membership fees of $255, and she donated $650 to the Red Cross. Calculate her taxable income. So you may remember from the previous page, I'll show you. Taxable income is the gross income subtracting off the deductions. So her gross income is $95,000. So that's what we're going to write here, $95,000. And we're going to subtract off the sum of all of those expenses. So we've got 3 expenses here. Let's write them in the gaps. $1,200, $255, $650. Now, using your calculators, type all of that in using your brackets. I'll give you a chance to do that. And your answer would be $92,895. So that's her taxable income. Now that's more practice at working out how much tax she has to pay. So you think about, where does that approximately $92,000 or $3,000 fall? It falls in this bracket here. So we follow these steps for working out the tax. So you start with the first number, $17,550, $17,550, and you add on 30 cents in the dollar as a decimal, 0.37, multiplied by the difference between her taxable income and the lower end of that bracket, which is $80,000. So 92,895, subtract 80,000 using your calculators. I'll pause while you do that. And our answer is $22,321.15. That's the amount of tax she needs to pay. Superannuation, known as super, is a way of saving money for what? You may have heard this, other people talk about it, retirement. So that when you're retired, that you've still got some income. Employers pay 9% of a person's income into an account. This is in what to the person's income? Addition, so on top of. Workers can also make what type of contributions to their super? Voluntary. So they can choose to add more money into that fund to save for retirement. If you like this video, give it a thumbs up and subscribe to the channel, and the next video in this series will be called Simple Interest. Thank you.